Hey, what's up, guys? Y'all know who it is. It's your boy John Davis, your personal insurance advisor. And today is Tuesday. And y'all know what we do every Tuesday right here at 7 o'clock p.m. Teaching Tuesday, where you sit back, you learn, we teach, and you leave here knowing more than you started when you came in, okay? Hey, guys, I want to say first off, thank you so much for joining me today. I'm so glad to have you. I got some good information and I have a guest today. So, y'all been talking to me about reverse mortgages. I get these phone calls about reverse mortgages, and I don't know much about reverse mortgages. So, I went and got a reverse mortgage expert that's going to come on in a minute and talk to us about reverse mortgages, guys. Okay. I'm so excited to have him here. His name is Dunn the home loan Anderson, okay? But before we get started, guys, there's a few things that I need you to do for me. Remember, guys, there's three things I need you to do for me. I need y'all to like my video, share my video, and make sure that you participate because this interaction is fully interactive. So you can leave questions, you can leave comments, all of that good stuff. All right, but listen, y'all, before we get started, remember I've been telling y'all guys about my book that's been coming out and how I'm going to do this Facebook group. Well, it has been done. Now we have our book, we have our books already out, and we now have our Facebook group, guys. I want you to go there. Take a look at the link below. That's where you can go and actually get my book and join that Facebook group. So remember, guys, go do that. Now, for all my viewers that's here every week, I want to tell you thank you so much. You're the reason that I do what I do, and I'm so glad to have you here. Okay. Well, listen, y'all, we got a lot to cover. We got a lot to cover today. So I don't want to keep y'all waiting. So I want to go ahead and grab Mr. Dunn. Let's go ahead and put up some information about him first just to get started, okay? Now, listen, y'all. Dunn Anderson is a mortgage broker that lives in Texas. I met him in Dallas. Great guy. He practices mortgages in multiple states around the country. Y'all see his contact information there. Write it down, take a picture of it, whatever y'all need to do. But if you're needing to get a mortgage, that's the guy that I want y'all to call, okay? Now, this guy has been in the industry for years, in the finance industry. Stockbrokers, industry, real estate, mortgage. So he knows exactly what he's talking about when it comes to reverse mortgages and things like that. So listen, I'm gonna go ahead and grab Dunn. Y'all go ahead and sit back, ask questions, and make sure y'all give him some questions to ask so that we can learn from this information. We're gonna talk about reverse mortgages. Dunn, come on in the room. Let's get started, bro. Dunn, how you doing, man?
I'm doing well. Thank you for having me.
Oh man, I'm glad you're here, man. I'm so glad you're here. Like you're like a celebrity, and it's just me, little old me, talking to Dunn Anderson.
I appreciate that.
No problem, man. So let me tell you something. So Dunn, I work a lot with seniors. I'll make sure I'm
Right.
okay. All right. I work a lot with senior citizens or older individuals, and I hear them often call me and ask me questions about reverse mortgages. I'm being honest. I don't know about reverse mortgages. If it was about life insurance, health insurance, Medicare, retirement planning, I can answer those questions. But reverse mortgages, I don't know much about. So I wanted to get you on to talk to us today about reverse mortgages, kind of get your ideas about if it's a good idea, if it's not. Let's go ahead and talk about it. Brandon, I see you're in the room. Ask some
Yeah.
questions to Dunn about reverse mortgages. Dunn, tell us, just give us a little idea of who you are. I've already kind of given the intro, but maybe I missed some things. So tell us about you before we get started.
Yeah, so I'm simple. My name again is Dunn Anderson. Right now, I'm a licensed mortgage loan originator, mortgage broker. I'm licensed in Arizona, California, Florida, Georgia, and of course, the great state of Texas. I always got to say that,
Yeah.
my birth state.
All
Um, I was a financial advisor for about 6 years. Before that, I worked with companies like T. Rowe Price. I've worked with Merrill, Bank of America when they did their merger. So
right.
I've been with AXA Advisors. I've been with the gamut. You know what I mean? Mass Mutual. I was a
Yeah.
big time life insurance guy as well.
Okay.
So I did all of that. And yeah, before that, back in I want to say 2012, I was actually in the real estate industry in Maryland. I was a realtor. I
Yeah.
did that for about 4 or 5 years. Um,
Okay.
Even did things like sold cars. So anything
Okay.
helping people, that's pretty much what I do, and
Okay.
that's pretty much what I've done.
Well, look, you got a lot of history to share and a lot of experience to kind of understand how a lot of the senior citizens are kind of being targeted when it comes to these reverse mortgages. What do you think about that? I mean, is it? Let me just start off and ask the question: What are reverse mortgages for one?
Okay, so a reverse mortgage is simply a senior, a person over the age of 62,
Okay.
leveraging their house. It's supposed to help you maintain your lifestyle or pay off debt, or if you have, let's say, a critical illness, you're
Okay.
supposed to be able to leverage your house and use the money from your house to pay those type of things off and to support your lifestyle. Let's say
Okay.
you're not a person that has an annuity, you didn't
Okay.
have a 401k, your social security is low, your disability is low. A house can be used to leverage and basically subsidize your lifestyle. That's what
Okay.
that. Go ahead.
So what's the difference between a reverse mortgage and maybe like a refinance or a home equity line of credit then?
I'm glad you asked me that. So reverse meaning the bank pays you while you take care of that asset that potentially goes back to them. You no
Wow.
longer make payments to them. You no longer make payments to them. Now, you can pay it off, which most people, let's be realistic, they don't end up paying it off. That's the
Okay.
big thing with this industry, or with that particular industry. That's the problem that people have with it. With a refinance or a HELOC is just a line of credit you take out on your house. You pay
Okay.
back what you use. It has an adjustable rate interest rate. You pay
Okay.
what you use, right? Refinance is me saying either I'm refinancing my home because I want a particular interest rate that's lower, gives me more favorable payments. Maybe I extend my long term, or maybe I actually shorten my long term because interest rates are so much better, or I take cash out and
Okay.
because I have so much equity. So that's
Okay.
the difference between basically the three.
Okay, so based on your experience, because I've heard kind of some bad things about reverse mortgages. So based on your experience, are reverse mortgage is there ever a point in time where someone should decide to get a reverse mortgage? Like what ideal client would be perfect for for a reverse mortgage?
Well, so I'll ask you, let me just get rid of this screen. There we go. So I'll ask you, so if have you ever had an elderly family member that had a house and they fell on hard times, but they didn't have any support system? Maybe they don't have kids that could give them money. They didn't have, like I said, a retirement, but they do
Okay.
have a house. Maybe the house is paid off. Have you ever seen a particular situation like that in your lifetime with your
Yeah.
house,
Yeah.
friends, family?
You know,
That's
probably
go ahead.
more friends like grandparents and maybe their elderly parents. And I'm in Nashville right now. I think you know that, but
Right,
here in Nashville, they're going through a lot of gentrification, and a lot of people are just excuse me, a lot of people are just selling off their houses.
right.
So would this be an alternative to actually selling my house? Or should I do something similar to the reverse mortgage if you're a person in the situation you just described?
If you're a person in that situation, selling your house, that means you have to move into a new place. You have to pay for it.
Okay.
So I would suggest if I'm in that situation, I'm elderly, I can't really earn income, but I have this asset.
Okay.
Maybe and you get to live in it, right? So you still get to live in the house. All you have to do is pay the property taxes and homeowners insurance. And you have to keep the house up. Because if
Okay.
you let the house decline, obviously it has no value to that lender when they go to take it. So for a person like that, a reverse mortgage could be a far better option than actually going ahead and selling it, unless maybe let's say you're disabled and you need to move into a facility and that the sale of that house is going to pay for that facility during your time there. Then obviously I would say selling it would be better.
Okay, so guys, listen, remember this is fully interactive. You all asked for Dunn to be here, so I want y'all to make sure y'all get all of y'all's questions answered, okay? So Dunn, this is a good topic because then I know with you working in the finance insurance industry, I'm sure you know of a lot of senior citizens who have pretty much had their homes taken because they went into a nursing facility, right?
Right.
I'm sure you kind of had. So before we get into that, Brandon just had a question. Let's throw Brandon questions up there. He said I may have missed it, but when does the senior pay it back at death, and what are the expectations?
So the expectations are for you to maintain the home, and at the point that you can pay, so you don't. So the way it works is this: your house is supposed to have at least 50% equity, but most people that take these have a house that's paid off. The idea is that you take the money and you pay it back when you're able to pay it back. But the question remains: if I need the money and I'm a senior citizen, to how would I pay it back? The reality is, most of these senior citizens won't pay it back. However,
Okay.
your kids, family members, anyone that you have given rights to that home, opportunity to pay is that asset. So that's the caveat. But the problem is,
Okay.
most people in that position, their children don't have the money to actually take that asset over.
Okay, so that's a scary point though. Like I just caught something. I don't know if it was right or wrong, but so if the point of a reverse mortgage is the ability is to ultimately pay the reverse mortgage back, why does reverse mortgage companies target senior citizens and not a younger population that possibly could have the ability to pay the money back over a period of time?
Well, because at the end of the day, for a younger person, you have a refinance. For
Okay.
an elder person, they're giving you the opportunity to leverage your asset. The reality is, if you don't have that family or you're not sitting on some type of nest egg, which then again, why would you take it?
Mhm.
You don't have the ability to buy it. Most people won't have the ability to actually pay that reverse mortgage back. They understand that, but these companies are in the business of making money, not just helping people.
Right.
Now, granted, there are different state programs, depending on the state you're in, that have programs that do their own style of reverse mortgage. So they do have
Okay.
those, and it depends on the state, but they're a little bit different in how they operate and how much money they'll give people. But you
Okay.
have to understand, this is still, it sounds really bad, right? When you're young, you're thinking, wow, my grandparent could lose this house,
Right.
which it should sound bad, but ask yourself, can I pay my grandparents' bills? If you can't do it,
I can't. I can't pay granny. I can't pay nanny's bills.
that house at the end of the day, when they pass away, that house probably would be lost anyway. I mean, we see it all the time. All walks of life. People are taking care of a house. Maybe they did a refinance. There's a little bit of a mortgage on it. The family can't even assume the mortgage, or the kids don't even want to live there. They want to live in a different state. So
Okay.
that's how you have to look at it. I used to have a negative view of it myself, but I realized this does help. What about that senior? You got to look at that position. Not the senior that went and bought the Escalade, because I know
Right.
that's the one that pops in people's mind,
Right.
because it's not really designed for you to go buy a fancy car, but there are seniors that do it.
So I had a client. This was probably about 3 or 4 weeks ago, and she was. I'm thinking she was in her mid 30s, so I'm assuming her dad is in his like late 60s. And she said that he actually came to her and basically said, "Look, I'm taking out this reverse mortgage because I feel like I want to live my glory days and go out and buy me a nice car and have some fun." But then he also advised her that if something were to happen to him, that they have a certain amount of time to get the house back. So my question to you, Dunn, is if I'm trying not to look at these notes or look at these comments. My question is to you, why wouldn't I go out with the money that I get from my reverse mortgage, kind of live the life of my dreams for the next 10 or 20 years? And then, if my parents have a life insurance policy, use the proceeds from that life insurance to pay the reverse mortgage off and get the house back. Is that how it's supposed to be done, or is that what you recommend someone do in a case like that?
Well, that's a big issue. So, man, I used to do those. I used to sit down and do those financial consultations and look at everything, right?
Okay.
Um, Most of these people probably don't even have life insurance. So I guess you want to go back and say, okay, yeah, if a person has life insurance, then a reverse mortgage would work for nearly anybody. You know what I mean? Because you leave it, you die, you leave that money,
Oh
you leave that wealth
wow,
behind. But
wow,
but if you don't have life insurance, which we know a great majority of people do not, or
right,
what do? They get old and they do the viatical settlement. So you got all these different things where they don't have what they need, but that's
okay,
just a part of the puzzle. So life insurance is actually the foundation of all of this, right? We could have actually started the conversation with what should a person have financially before they even get old and get to this point that would make it more feasible or more beneficial to them and their family when they do pass on. And that
wow.
answer would obviously be life insurance. And when I mentioned, oh, this person has broke a hip, got cancer, heart attack, stroke,
Mm-hmm.
diabetes, they're starting to get things amputated off of them. It happens. White, black, Asian, whatever race, it happens. So the
Mm-hmm.
question is, if they had those critical illness policies, long-term care, that
Right.
might prevent you from doing what? The
The
reverse
li-
mortgage.
right, because you have the living benefits. So y'all, we got several viewers in here. To my viewers that just came in, we're talking about reverse mortgages. A lot of seniors are being inundated with the reverse mortgage marketing tactics, and so we wanted to come on and talk to you guys about reverse mortgages, how they work, what they are. When is a good time to get them, when is not. So that's something we're talking about today. Kristen, thank you so much for coming in. She said life, cancer, and critical always a must. Absolutely, Kristen. That's what we're all about. So Dunn, I know now that we've kind of established you blown my mind about the reverse mortgage because I never like every time I've heard reverse mortgage, I've kind of been like kind of afraid to talk about it because I never really knew. But let me ask you, if my grandmom has a reverse mortgage and she passes, let's go into more details on how the money is actually paid. I know you said you have to have 50% equity. Can we do some number work, or you don't want to go into numbers done? I want
Well,
some
so the amount you receive is based on your death table, right? So let's say that's why they use the age 62. They use a death table just like life insurance.
Oh,
So
okay, okay.
that's how they, and then also your credit matters as well because there's an interest that is tacked on to that would also decide how much money you receive. So you can
Okay.
either receive a drip payment where you get a specific amount of money every month, or you can do there's like three payments: a drip payment, you can do a specific allotment. Maybe say you want to get paid 10 of that, and you're going to pay it back. You can get the entire lump sum that you're eligible for up front. So there are
Okay.
multiple ways that you can get the money given to you, and it's all based on your situation.
Okay, okay, okay. So from your, I'm assuming that if you're talking to a person who um is looking like you said to buy that Cadillac, they don't probably want the drip payment, right? Like I want the entire $100,000 so that I can go out here and live my best life. But from your experience, when people do reverse mortgages, are they getting the drip payment, or are they just requesting one big lump sum all up front?
So what I've seen, so what we do as brokers, we typically refer them out. Like I
Okay.
don't do reverse mortgages myself. Like I won't do them. That's just me. But what I've seen is they're mostly lump payments because the people that need the money is for real situations. They have, like I said, they have other things they need to catch up on in their life. They have medical bills. It's typically for things like that. Like
Okay.
it's not most of the time you would think that maybe they're just people, always randomly doing it, which I'm sure there are because like I gave the Cadillac example, there are
Right.
in most
Yeah.
of these cases now because the industry changed a little bit, right? So
Yeah.
every part of lending has changed. So you don't have like the bad actors that would advertise that to people. Hey, I can
Okay.
get you this money so you can go get that car. because
Okay.
believe it or not, people would get mailers like that. They don't do that anymore.
Okay. Okay. So reverse mortgages are regulated by the government, I'm assuming,
They're
right?
regulated now, correct?
Okay, okay, good deal, good deal. So I'm trying to think. Does anybody have any more questions about the reverse mortgage thing? Remember, guys, we have the retirement calculator. I know, Dunn, you was talking about retirement. That's really really important that people start preparing for retirement. I know I have a lot of younger viewers that come on. This is something, guys, like Don just said, it's important that we prepare so that when we get older, we kind of already got a life insurance policy with living benefits and all of that, so that we're not a person that has to take out a reverse mortgage because we really need the money. You know what I mean? I never even put the two and two together, done, to realize that life insurance, reverse mortgage, it all can kind of be avoided if we prepare for our retirement in the right way, you know.
Yeah,
So
so Brandon, as a broker, I can do them. There are specific lenders that do it. I just choose not to. My business is normally purchase. Like I don't do a whole bunch of refinances either. Like I'm a purchase guy. All of my advertising and everything, I'm a big time advocate of like home ownership. So I just don't do them. I mean, it may be something I'll add to my business in the future because there is a need for it, especially with my background as a financial advisor. I could
yeah.
educate people a little more. And just to piggyback on that point, before you can even do before you can even do a reverse mortgage, you have to meet with a reverse mortgage counselor. Like you can't just go and say, "Hey, I'm 62, let me do a reverse mortgage." It doesn't work like that.
Oh, really? So what type of, like, I know when we look at annuities and things like that done, you know how it works. You have to pass like a suitability report or at least a suitability check where they look at your assets, they look at your savings, they see how much debt you have, and is an annuity a sustainable thing for you? Is it the same way for a reverse mortgage? Is it like a suitability check kind of?
The only suitability you will get is, does your DTI support it? You don't have outrageous debt to income. You don't owe like IRS tax debt, state taxes, and things like that. That's the only thing you don't owe. You don't have any debt that would cause that house to be taken by another entity. That's the
Okay.
only thing they do. They don't go the step above with suitability like we would in that industry,
Okay.
financial
So
services.
so so I'm about to go deep. I did a video and it was called "Don't Let the Nursing Home Take Your Home." You know what I'm talking about. You know, when seniors go into a long term care facility and they're trying to do the Medicaid spend down and all of that. How would that factor in to going into a facility that would use your assets to pay for the cost of service, like a nursing home? Like, if I have to go into a nursing home, is there a way, or do people go and take out these type of reverse mortgages and get a lump sum and then you still use that house as the Medicaid spend down, or is that not an option?
You're supposed to continue living in the residence.
Oh,
So that's a part of it. It has to be your primary residence. You have to live in it to keep it up. That's a gray area. If you can't live there because you're ill and you have to go to the long term care facility, technically, I don't believe you would be able to get the reverse mortgage.
okay, okay, okay. Yeah, and I definitely not encouraging anybody to do it. I'm just kind of interested in seeing how it all kind of works together, because this is interesting. Like, when we look at life insurance, reverse mortgage, asset protection, like how all of that works together. You know what I mean? I never even knew they all kind of worked together. So that's
Right.
interesting. What's another question, guys, that you all have for Dunn about reverse mortgages? I know Kristen, Markel, thank you so much for coming in. Brandon, you've been on fire today with all these questions. Um, let's see who else we have in here, guys. Y'all come on here and ask Dunn some questions about these reverse mortgages. I know my dad, he wanted to come on. I'm gonna call him when I get in the car if he not here. Because it's something that we all need to know, especially those of us that have parents that's going into retirement that's considering something like this.
Right.
What's some other questions that you usually get when it comes to reverse mortgages? Are there some that stand out that is kind of a constant question that you usually receive?
Well, normally what I hear is, am I going to lose my house or will my parents die? Hey, my parents may be considering this. Will they lose the house? But that's the biggest question. And the reality is, more than likely, if no one can come in and pay what is owed to that lender, yes, the house is gone.
So, but you made a point that there has to be, I guess, 50% of equity in the house. How much, when we look at loan to value, is able to be pulled down in a reverse mortgage at one time? Like if my house is $100,000, just using low numbers,
If
and
it's paid off, you can take 100%.
really,
Yep.
wow, I didn't know that.
Yeah, it's
I
not
didn't
like
know that.
a it's not like a refinance where you get limits to how where they'll say, well, you can go LTV 80 or something like that. Like you can pretty much take it all because remember, it's really technically
Your money.
because it's your house. They're gonna have an appraiser come out and determine the value.
Okay.
Should you pass or are you not able to keep up with everything, the bank should be able to take that, or lender should be able to take that asset and sell it for what is owed or more.
Okay. Okay. So what happens if I only take 25 or 30% of my loan to value? My house is valued at 100,000. I only need 30,000. Is if my parents or my grandparents pass and I'm unable to pay that 25 or 30% back,
It's
do
gone.
the entire house is gone?
Yeah, because you don't like it, it's gone. You don't have the money to pay it back. That's a part of the deal. Like they have to have their money, and I think they give the person 90 days. I believe. I'm not sure. I could double check probably
Uh-huh.
after this, but I think it's like 90 days that you have the option to go ahead and pay that off. Now you can
Wow.
also start paying it back while you're in the reverse mortgage. So let's say you took that lump sum, but you took 50,000, you only needed 20,000. You used 20 and you immediately just started paying it back. You leave yourself a situation where your family can hopefully, if you've had the discussion, take that over if they've got the money or pay that
Wow.
off or help you pay it off.
So when we talk about help them pay it off, is it like having a mortgage, a brand new mortgage, or is it a lower rate, or is it a higher rate, like a higher interest rate, like a credit card? I mean, what type of payments are
That
we?
interest rate is not going to be like a credit card, but it's going to be based on whatever their credit criteria is. So you could be paying it back at a 6% premium or 5% premium. It's based on whatever rate that lender is offering.
Wow.
So
So is it?
that also determines how much you get as well, because they use that in their calculation.
So I'm assuming that just like when it comes to you being a mortgage broker, people come to you to shop around
Right.
for the best rate. Is it the same way with reverse mortgages?
They're on a whole bunch of companies doing them. Like so, with us, I think we have two that we'll refer people to that we actually believe in. Right. There's
Mhm.
not a lot of this. That industry is very small.
Wow. Wow. Okay, guys. So listen, if y'all just joined us today, we're talking to Dunn Home Loan Anderson about reverse mortgages. If y'all have any questions, remember this is a fully interactive platform, guys. I want y'all to ask him. He has answers. Come on and join in. Leave some questions, comments, all of that good stuff, y'all. If y'all have any questions, go ahead and jump on. Brandon says so. Basically, becomes encumbered by a mortgage that is not paid until such time that the owner can pay. So yeah,
Basically, you're taking out. It's like when what did they always say? You're taking out a second mortgage. Essentially, it's the same thing because you took the cash, but somebody has to repay that cash. But
right.
at the end of the day, like you said, the reality is in most situations or many situations, I don't want to say most, that person that did it, that elderly person, may not be able to pay it back.
So let me ask you another question that goes a little further. From your experience, do most people lose their houses because of a 100% amount that they pulled out, or for 50 or 30%?
What I've seen is the people that are on the higher end are based on the people that do the loans in my industry. It's the people on the higher end, but it's not. You're not losing your house, right? Because if you pass away, essentially, are you losing your house when you pass away? They
Right.
just never were. They had the ability to pay it back, but at the same time, they kept that house. They kept that house while they were still alive. They were able to live in it and keep it up. And it's just like, let's say your parents have a big fancy, let's say $1 million house. They
Okay.
only owe 300,000 on it, but they pass away. But they left you in the will to take it over. But you go to try to take it over. You don't have the credit ability to take over that loan or to get a loan to pay it off.
Okay.
Essentially, what's the difference?
Yeah, I guess it's
That
not one.
house would that house would still be gone. I mean, you would have some rights to sell it. That would be the only difference. Now you don't have any rights to it. Like you can't put it up for sale or short sale or anything like that. But it still kind of belongs to the bank because there's still a debt and you can't take it over. So in my eyes, I see it kind of similar the same way.
So do I have the option? Yeah, Kristen said then the kids lose the house. So do I have an option to sell the house? Like if I have a situation where my grandmom has passed
You don't
now,
have that option because it belongs to that lender now. You have the option to pay them what you owe, what is owed, and then you can sell it.
but I
Because
can't.
let's say the house is valued at 500,000, and the person that passed away, your parent or grandparent, only took out $80,000,
Okay,
but everything else was paid off. The whole house was paid off, but they took out $80,000. That means that bank can sell that house. You have no rights to it. You would have to figure out how to get the money to pay off that debt, and then you can have the house back. So to Kristen, yeah, they can't afford it. So they don't lose. You can't lose what you can't afford. It was never theirs, right? So again, this goes back to life insurance. Most kids that are living their own lives, doing their own thing, whether they're 30, 40, they got their own families, their own household, probably won't be able to pay off mom and dad's debt. So how does mom and dad remedy that in the future? Life insurance.
right. Wow. Okay, so Kristen said, so is it similar to a foreclosure if the parents die and the kids can't afford the payments? I mean, I guess it
It's
would.
basically, I mean, it would basically be, I guess you could call it a foreclosure because that just means it goes back to the bank and they can do whatever they want to with it.
So we've covered a lot, done. We've talked about reverse mortgages, what they are. I'm surprised to find out exactly what they are. I guess we kind of discussed who would be the ideal individual for them, or the people that normally would, I guess, attempt to receive a reverse mortgage, and then how to avoid the situation of the reverse mortgage taking the property into foreclosure. So we've covered a lot, guys. If you're just now joining in, we're talking about reverse mortgages. Of course, this is going to be streamed everywhere, and you're going to be able to go back and look at it. But if you have any questions for Dunn Home Loan Anderson, he's here talking about reverse mortgages. If you have any questions, I want y'all to go ahead and ask him. We may not be able to get him back on anytime soon. So let's see if we have any other ones. I think that's about it, Dunn.
Yeah,
Anything?
yeah. Before we wrap up, though, I know like Brandon and Kristen, y'all think a lot like I used to think. Like I said, it can help people, but at the end of the day, are the younger people having the conversations with the elders? Because a conversation with the elders can actually stop this. Because if you sit down, hey, mom, dad, you just hit 50. Well, before this happened, did you get your life insurance? What are you doing? How are things looking? When you have those conversations and a plan, maybe you can help avoid having to do a reverse mortgage. like I said, everything is a tool. It could definitely be a bad tool, especially if no conversation is had and you had plans on taking over that house, and all of a sudden you get a letter that says, "Hey, this house belongs to us." So
Wow.
I definitely understand, but you got to have that conversation, with your aging relative. Sorry about that,
Yeah.
John. I just had to.
Yeah, no, no, that's a good point because I know, a lot of people that I go out and see, we talk about living benefits. Like you were saying, one of the reasons that many people go and get the reverse mortgages is to cover medical bills or because they have a critical illness. You can avoid having to take out the reverse mortgage by having a life insurance policy that has living benefits where you can pull out 50% of your policy limit to take care of expenses and things like that. So it all kind of works hand in hand. I'm just so glad that you came to join us today, Dunn. I appreciate you, man.
Well, I appreciate you for having me.
No, no. When you coming back, Dunn? I know you out working. You out jogging, walking, closing
just
mortgages,
let
all
just
this
let me
stuff.
know, and I'll get this thing situated. I'll use my other camera next time. I'll figure it out.
Look, it's working good. It's here. I'm in Nashville and it's storming like crazy. That's why I think the signal's going in and out. So I'm gonna go ahead and jump off. But hey guys, listen, we've covered a lot. We talked about reverse mortgage. Let's y'all know Sabu, he's with me all the time. Let's throw up some information about Dunn. If y'all have questions about mortgages, Dunn, tell us what places are you licensed in again?
Yeah, so I'm licensed in Arizona, California, Florida, and excuse me, Arizona, California, Florida, Georgia, and Texas.
Okay, when you gonna get Tennessee?
I don't know. I mean, you're there, so anytime I, meet somebody that's somewhere, I try to get the licenses. So we'll see. It only takes about 2 or 3 months to go through the process. So we'll see.
Okay, well, go ahead and get it. I can send you some people. We got plenty of people that need mortgage assistance here, right in Tennessee. I'll be back in Texas pretty soon too. So,
Okay.
so listen, guys. If you need any information about life insurance, if we've been getting tons of people that calling me, we've been getting tons of people calling, getting life insurance quotes, going ahead and getting life insurance. Y'all can see my Academy link right there on the screen. It's also going to be in the notes there. The link in the comments. Y'all can go in there, comment. Y'all can go in the comments, schedule some time on my calendar. I have availability a lot of the times, or you can DM me right here on Facebook, LinkedIn, Instagram, everywhere this is. Guys, I want to tell you again, thank you so much for joining me. Remember, this is Teaching Tuesday. We're here every Tuesday at 7 o'clock p.m. We discuss all things health insurance, life insurance, Medicare, retirement planning, reverse mortgages as of today. So, Dunn, thank you so much for joining me. Y'all have a good night, and I will talk to y'all soon. Peace.